So today I'm in beautiful Miami, Florida, because I always like to visit the states that I'm licensed in. I was gonna visit some people, shake some hands. Yeah, about that. So what we're seeing with the stock market right now is we're seeing the stock market get just brutalized. We're also seeing the 10-year hit the lowest it's ever hit. And this is all because of fear around COVID-19, also known as coronavirus, also known as, oh my God, is it the new plague or is it just the flu, right? It's terrifying. People are hoarding. Everyone's afraid, right? And we need to talk about how this is affecting mortgage rates, because everyone is saying, why aren't rates lower? Why aren't they lower? The whole world is on fire. Why aren't rates lower? Okay, well, first off, let's cover this. The rates are pretty darn low right now. So in the last month, we've seen rates take a pretty big drop, but they're not going lower. And the reason for that is twofold. Number one, supply and demand. So over the last few weeks, think about it like an all-you-can-eat buffet, okay? And all the lenders have been at this all-you-can-eat buffet, taking loans after loans after loans after loans. They can't eat anymore. They're full. They cannot digest the amount of loans that they have eaten. So even if you're coming and you're like, I am caviar, wouldn't you like to take my loan? They're not going to be offering you the best rate necessarily because they can't fit anymore. So you're gonna see that with different lenders, you're gonna see a big rate difference. And we're already starting to see that. I was talking to one of my friends who's a lender at a different institution, and he was telling me what his rates were. They were like 1% higher. And his management had told him that it was because they needed to slow down the business. And it was because they have so many loans in, there's so much demand for these low rates, they're having a hard time moving through them. Okay, so you're going to see that, and what you're going to be looking for is you're going to be looking for lenders that are hungry, that have appetite, that can still take your business. That's where you're going to be finding the best rates. Now, beyond that, even if you're dealing with that lender, you may be thinking, but wait, the 10-year is the lowest it's ever been. Why aren't they even lower? And this gets into mortgage-backed securities and how that whole market works. So all the uncertainty that you may be feeling right now, like, you know, what's going to happen tomorrow? What's happening with my retirement portfolio? How is this going to affect housing? How is this going to affect work? Will I be working from home forever? What's going to happen? All the people who buy mortgage-backed securities, they have that same fear. So they're demanding higher yields in order to make investments. So when you're looking at all of this, the only thing that you need to know really is that if you hear a great rate, if it's going to make a big change to your payment, save you $100, $200, $300 a month, that's a big deal. I would suggest locking. You know, trying to find the bottom in this market, there's so many different factors at play. We could hear tomorrow that there's a vaccine or that really it's not real. Like, who knows what's going to be told to us tomorrow, and all the markets could change again. So there is a ton of volatility. Rates aren't following what you would expect it to follow because of these external factors. So I hope this has been helpful. Thanks for watching.